Jamie, welcome back to Face. And I overslept, but the gods woke me up at 5 so I could be here to talk to you because next week's a big week with central bank activity. How are you, buddy?
Well, thanks. How are you?
I'm doing okay. So, first of all, everyone's saying it's a done deal. Fed is going to go the quarter, but the key might be in the presser. How are you looking at this for next week?
Just before I came on, I was looking at the pricing, the SOFR and the Fed funds futures, and I think, yeah, we're nailed on, baked in the cake, as they say, for 25 next week. I think that's probably going to happen. The CPI numbers this week were, I suppose in line, slightly hotter than expected. I think the most interesting one this week was the PPI. That was much higher than expected. I can't remember the exact numbers, but on both the month-to-month and the annual rates, I think certainly with the annual rate of PPI, the number was it was higher than all of the forecasts. I think 30 or 35 forecasts in the Reuters poll, so it was much punchier than expected. Obviously, not enough to move the dial for this week, for this month rather. But I'm just looking at next year. If the Fed moves 25 on Wednesday next week, then we have only 50 bips priced in, 50 bips of cuts priced in for next year. And that's remarkably low. And I suppose that goes some way to explaining why the dollar's been so perky the last few weeks and months. 50 bips, when you compare it to, say, the SNB or the BOC, the Bank of Canada, or SNB or the ECB rather, then it's a relatively tight ship the Fed is going to run next year, according to current pricing. But I suppose we can discuss whether or not we think that's how it will pan out.
Okay, a
What's your
tight
view?
ship. Yeah, a tight ship meaning they're going to be stingy with monetary stimulus. Is that what you're
Yeah,
saying could
yeah. I
be?
mean, yeah.
Okay.
Certainly relative to some of the expectations earlier this year. At the start of the year, I think we're expecting what, up to 150 basis points of easing.
Yeah, yeah.
By the end of next year, now we're down to, okay, we've had a few cuts so far, but only 50 priced in the curve for next year. It's certainly relative to other central banks as well. It's not much at all stingy as you say.
Okay, so there's another central bank in Asia that's going to be meeting tomorrow, and it's very important because the yen is still a carry trade. We had the unwind of the carry trade here, from the highs at 62, and that's what caused a ripple in the markets in July and August.
Hmm.
And is it possible that the Fed eases and the BOJ goes ahead and raises rates? That would be a perfect storm to, uh, you know, send the yen higher, which means U.S. dollar yen lower,
Yeah.
which again could pressure the carry trade. Could this end up being carry trade unwind 2.0? This was 1.0,
I was going to
and
say,
we're
if
about to,
where's the 1.0? Is the 1.0 from July? That
yeah,
was a heavy move. That was a pretty dramatic move, as your chart shows there.
yeah.
But again, I was
Yeah.
looking at this just before I came on, and as you've underlined there, it looks like 140 is a pretty solid line of support. I mean, I'm no
Oh,
technical analyst, but
you're
because it goes
right.
back, it goes back to last year. It goes back to the middle of last year, I think.
Yeah,
We've
it
had
goes
a
back. Yeah, 140 is big. Look at this
big one.
horizontal line all the way
Yeah.
through. So, okay.
That's a big one.
Yeah.
And when was
Yeah.
that? Was that the beginning of this year, end of last year? It tried again, tried and failed
Uh,
again.
yeah, well, I have it drawn. I think this was it was important here. It was just it's a pivot line. It's huge. It's like 152 is, although we're playing around with 52. So 40 and 52 are big. Do
Yeah.
you think they're
I'm
going to
at
go at,
52 right now. I'm at 52 right now, aren't we? Give or
yeah,
take
we're
a
above
few
it. We're
bits.
at
Yeah.
340 right now. So it put in a good week. So I mean, are we going to try and take out this high here? I think a lot of people, this action right here, is maybe people thinking that they're not going to move. Do you think they're going to move, Jamie?
Again,
With
looking at the price, I think what do we have here? On the future, the Bank of Japan, I think it's only 5 basis points priced into in for five
okay,
basis points of hike. So basically no change. We're looking at a 75% chance of no change according to the futures
okay, all right.
for
Well,
next week. And only, I mean, of course, the Bank of Japan moves at a different pace than other central banks, as we all know, especially when it comes to hiking rates. And only
okay,
45 basis points of tightening is priced in by the end of next year. That's pretty, yeah, again, pretty stingy. We understand the long-term historical reasons why Bank of Japan will be reluctant to move quickly on any tightening. They've been burnt in the past.
okay,
But they will be watching. I think even if we don't get a move next week, we're looking at January, 10 basis points, 10, 15 basis points back in January. I think the Bank of
okay,
Japan will be looking very closely at developments in China over the last, well, certainly since end of September. We've seen huge efforts and moves
yeah,
to push in stimulus, monetary stimulus, fiscal stimulus, liquidity injections from Beijing, and now there's talk of obviously with the Trump election, tariffs are going to play a major role in Beijing's policy thinking next year. There's talk of letting the yuan go, maybe towards 750. Capital economics guys there think it could go to 8 if the Trump tariffs come through in full force. So that could spark huge waves across Asian markets, competitive, bigger thy neighbor
yeah,
kind of devals, to
yeah.
which
Yeah,
Japan
we
would
have.
not be immune from that at all.
Okay, all right. So that that's a big deal. What's going to happen with tariffs? Let's talk about tariffs a little bit, Jamie. I mean, the threats of them. That's all we've heard a lot of threats, like if the BRICS go ahead and try and develop a currency, each one of those countries are going to have 100% tariff. We
I
threatened
think,
Canada.
to be honest, I think the any chat of a BRICS currency is, I think that's one for the birds.
Okay,
I don't think that's going to happen.
yeah,
I mean, if you just think about it, as logistically, politically, economically, in terms of financial flows, etc., and I just don't see it happening. I may be wrong, of course. It wouldn't be the first time, but I don't think a BRICS currency would get off the ground.
okay,
Um, not to say that other countries won't want to, and they have, as they have been doing for many years, trying to maybe minimise or reduce their exposure to the dollar in terms of trade flows, etc., and FX reserve holdings. But that's not the same as setting up a kind of BRICS currency, kind of a disparate collection of countries, maybe at the best of times, and certainly in the current climate, I don't think that would happen. Makes a fantastic headline and story though.
okay. So, all right. I know. We've been talking about that for 40 years. The end of the reserve currency status for
Well, it's
the dollar.
gradually been chipped away, and chipped away. And I
Yeah.
think we're below 60% in terms of dollar holdings for overall reserves. And I think you and I have spoken about this in the past. The dollar's share of overall reserves is definitely lower than it has been in what 20, 25 years. That's not in dispute. But its share is being kind of taken and eaten away by smaller currencies, so like the Korean won, the Aussie dollar, currencies like that with a 2, 3, 4% share, rather than say the euro, which is obviously the second biggest currency. So it's not as if the second biggest currency is making inroads onto the dollar. It's all the lower currencies, smaller currencies underneath, which are taking a little bit more share. So the dollar still, relative to second and third place, for example, is still extremely dominant, and therefore overall it still retains a very strong dominant role in terms of FX reserves.
Okay. Okay. Why don't we talk a little bit about, you brought up Europe and the euro, and I know that it's very hard for people to buy the euro because of all the news out of Europe. It's like the bloc is disintegrating country by country. In '08, we were ground zero for the financial crisis. Should we be looking across the pond at Europe as being the fuse that could light the next financial crisis because of what's happening there?
Then maybe the boy cried wolf for Europe as well. I mean, if you go back to the 90s and the well, late 90s, 1999, the setting up of the Eurozone, many people called its implosion straight from the off. It survived, as you said there,
Yeah,
2008. It survived the Eurozone crisis in 2010, 11, 12, and Draghi's whatever it takes.
yeah,
Moment, etc., etc. So, after all those crises and everything that's been thrown at it, it's still standing. However, that's not to say it doesn't have its problems. It's got war on its doorstep. It's got an energy crisis. German economy is in or in and out of recession. France has its political and
yeah.
budget problems. So yes, there are clear problems. I think that kind of sort of doomsday scenario that you're sort of suggesting may happen in terms of a broader crisis would only come if the eurozone was to show signs of actually unraveling, i.e., France leaving the eurozone, for example, or something along those lines.
Okay,
Of course, it's got an immigration problem like many other parts of the world, but it's got it on its doorstep. So yes, there are clear and grave challenges, but I don't see that kind of crisis spreading out and spiraling out of control onto a broader, wider level,
okay.
unless there is a
How about
real,
their
real threat
banks,
of
Jamie?
Brexit. Well,
How about, I
yeah,
mean, aren't there issues with their banks that they never really cleaned up their balance sheet like a lot of U.S. banks did, and that
that's fair. Yeah.
all those toxic assets are still sitting there but not being marked to market? Is that what's going on?
Well, I think US banks don't really mark to market
Yeah,
everything either, do they? As
they
we found
don't.
out last year in March, was
Yeah,
it? When was the SVB? I can't remember now, but yeah. So yeah, these are issues, accounting issues, and it happened in the UK as well, but it certainly happened here in the US. Um, I suppose that the banks, yeah, their profitability is always in question, and the lower the ECB puts interest rates as it might have to try and revive growth. That puts pressure on banks and interest margins as well. So yeah, I think the banking system in Europe is it's not as robust, shall we say, as others, certainly here in the US, and it probably hasn't been for many years. And part of the problem may be, as you say, some of the assets they have on their books and the structure of the Eurozone itself.
yeah,
But again, I don't see the complete unraveling or implosion
well,
unless there is a real danger of the whole construct unraveling. And as I say, it survived 2008, it survived
yeah,
2012. It would have to be pretty major and dramatic for it to be worse than those two events. Again, not to say it can't happen. I just
yeah,
don't see what that might be right now, unless it's a political thing or a war, or I'm
yeah.
struggling to see
I'm
what it is.
Yeah, I actually want to hear the market start talking about that under parity as a layup, thinking maybe we could get to 102 or so. And I'm interested. I've heard from trader friends that months ago the euro was underowned. Are you seeing that? And with the press it's getting, it's hard to buy it.
All the signs point towards, certainly in the last few months, and momentum and direction and fundamentals and flows and all the economic and markets indicators point toward a lower euro, and we've seen that in the last few months. The big numbers parity. Um,
Yeah.
I don't see too many houses calling for a break below parity, though. I've been quite surprised by that. There's been some
Oh,
collective sense of maybe this is as low as it gets or down towards parity, but
oh,
not actually
really?
through it. Yeah, I
Oh,
mean,
okay.
unless I've missed them, but I think most of the big houses see. In fact, I think most of the big houses think the
Think this
dollar's going
was the
to.
bottom.
What numbers? Where are we? 102?
Yeah, it was 103.
Yeah, no,
Uh,
yeah,
that was
yeah.
right before Thanksgiving, and really never looked back. Hasn't provided much of a pullback either. So the
No, and I
houses
think,
they're constructive. Most people are looking for a lower dollar, Jamie,
well,
and it's
that's it, and
because
that's it. And you can't have a lower dollar and a lower euro, obviously. So I think
right.
maybe it's just a byproduct. It's not necessarily a bullish euro story, but maybe more of a consequence of a lower dollar. You would obviously expect the euro to go maybe back up to sort of the 110 area, perhaps, more by default than anything else.
Okay, a trader friend of mine also said, Dale, if you want to know what's going to happen with the dollar, all you have to do is listen to the incoming or current administration, and they usually get what they want, maybe not right away. Have you found that to be true, that administrations that, benign neglect, they could do it that way? That do you think Trump's going to be successful in engineering a lower dollar?
Well, there's a bit of a contradiction, a sort of basic contradiction at the heart of the sort of Trump trade policy vis-a-vis the dollar. In that, if you know the onshoring, the
Yeah,
America first, get manufacturing back on track, all these policies and tariffs, obviously,
yeah,
to try and boost U.S. manufacturing, which would obviously. Which would obviously maybe, or the aim being to close the trade deficit. All those
right.
policies and aims are towards a stronger dollar, and we've seen that since the election. The dollar's picked up, and
Yeah,
all those indicators point to a stronger dollar. However, in order to achieve those sort of competitive advantages, and you would need a lower dollar. And Trump, if anything, on FX, he's not known as he doesn't want a higher dollar or higher interest rates. It's the complete opposite. He wants lower interest rates, and by default, a weaker dollar to try and gain that competitive advantage. So I just
right.
don't quite see how the two marry up.
Yeah.
He might want a lower dollar, but his policies would maybe lead towards a stronger dollar. So it remains to be seen how they square that circle.
Okay, let's talk about tariffs. We do have some history of tariffs being a problem, like Smoot-Hawley in the 30s. It's the execution of tariff policy that makes the difference. I see it as a tax. I don't think it's going to help up economic growth. What's your belief in how this tariff strategy is going to work out? Because we haven't onshored or reshored all our manufacturing. We're vulnerable as a country because we do still rely uh, pretty heavily on China for pharmaceuticals, for our transformers and our electrical grid. We're not we're not manufacturing this stuff. There are a lot of countries that could hurt us. Trudeau said, "Okay, go ahead, and we're not going to ship oil." So it already has a feel of, not just tariffs, but a trade war,
Yeah,
full
yeah.
blown.
I mean, I suppose if you threaten countries with tariffs and restrictive and aggressive trade policies, then you might get a backlash, or you might get some pushback, and from Canada and China as well. It remains to be seen what they do. They could quite easily allow the currency to go. To give that, to try and regain their competitive advantage, or to kind of wash away the effects of tariffs on their goods. I have to
What would
say, it's
happen
probably
to markets? I know a lot of market participants, that people have been riding the bull market for a long time in equities. And I've seen instances where we've had uh, the yuan, uh, you know, lose value sharply in a short period of time. And the market seemed to react with shock. It was not risk on when they did that. So tell me how that could cause risk off with them devaluing their own currency.
well, I think if they were to devalue, and obviously again it depends on by how much, but if they were to let the yuan go, and I guess some of as I said earlier, the guys at Capital Economics say in a worst case scenario, if Trump's 60% tariffs are imposed, then the yuan could go to 8. per dollar, and that would be a remarkable devaluation of the yuan. But again, it's not in China's interest. It's not in anyone's interest really to have a full blown trade war. So I'm not quite sure why anybody would push for it. Then you get into the realms of how much of this talk is bluster and threat and posturing, negotiating tactics and tools to try and come to some agreement. Again, it's not China's economy does not want cannot be. It's not braced for and positioned for any trade war which would hit growth. They've got severe problems, deflation. Canada's economy. I don't think Canada has much appetite for a trade war with its biggest trading partner either. To be honest, I don't think many people here in the States, whether it be in Washington or on Main Street, have much appetite for a trade war either. So maybe it is negotiating tactics and posturing.
We hope it is. It's interesting.
To say that in terms of how markets play this. Obviously, you have to react to news and you have to react to what you think is going to happen. But since the election, we had a spike in the days afterwards in certain markets and pricing of certain assets. But Wall Street is still up. In fact, as you were saying earlier, it's at all-time highs. Treasury market volatility is the lowest since before the Fed started hiking rates. VIX volatility is low, 13. So I don't see markets pricing in that kind of escalation just yet. That could happen after Trump's inaugurated, and who knows what China does as well.
So we have everything's perfect right now.
Well, it's a bit of a Goldilocks story, isn't it, right now? Yeah. And I think the bull run continues to the end of the year. I think, as I said earlier, talking about some of the data coming in may not be so hot. Some of the inflation numbers might be higher than expected. I think people are just looking through numbers in the last few weeks of the year, get to year end, continue this run, and then regroup for January 1. And I think I'm sure you've seen some of those calls as well, but there's a sense that things are getting a little bit frothy in terms of forecasts and giddiness and optimism. I saw the guys at Oppenheimer call for 7,000 on the
S&P.
Was it 8,000? Was it 8,000?
Could be. I know a guy looking for 75.
I think it was 8,000.
They're out there.
It was 8. Yeah.
Yeah.
They are out there, and the more you get those bullish calls, especially when valuations are so rich and concentrated in certain sectors of the market that we all know about, then you do have to wonder.
You brought up 8 in
was 8,
the yuan. You brought up 8 in the yuan. All right, so if you look at this range that we had from 740 to 670, that's 70, and we start taking out 730. That measures 8. It almost looks like it's going there.
Well, 730 is the big one that's tried and tested that in the last few months, hasn't it? The last year or so.
Yeah, I mean, we have a breakout over 740 on a few closes, and we're there.
Yeah.
So, that we're close. We're at 727. So it's either a great short here, or it's on the verge of turning up for another leg to the upside. It's a coin toss to me.
China's a fascinating story at the best of times, and especially now. I mean, we had since late September, the wave of stimulus announcements, and we had David Tepper saying, I think it was on September 26th, buy everything. That was his direct quote. He's buying everything China. And the obvious question is this time different? Because we've had these moves before where we think Beijing is finally getting on top of the sort of the housing crash and the deflationary problems. Is it different? If it is, then yes, China's certainly a screaming buy. But is it different? I certainly don't know, and I think trade war the fears and threats of trade wars with the States must temper some of that optimism.
All right. Well, I tell you what, Jamie, we sure covered a lot of ground in 30 minutes. Um,
China,
uh,
US, Europe. Yep.
Currencies, rates. All right. One last thing. Yield curve. That has moved from being inverted to, it's going the other way now. Should participants be concerned because normally market events turn negative after the
That's right.
inversion turns. So, what's your view on that? Do we continue to, have the long end lag and the yield curve can uninvert?
Well, we've been, I think I say the market in aggregate in general has been caught offside on the yield curve for what, 2 years now?
Yeah,
It's been consistently wrong, and the not only has it been the market been wrong on the direction of the curve, it's been inverted for 2+ years. But the impact and implications of that, we were all told that that was the recession signal. Watch out, recession's coming any day now, any month now.
yeah,
Of
right.
course, it hasn't happened, and that's not to say it won't happen. Of course, there will be a downturn at some point. But do we see recession on the horizon for next year? Possibly. And as you say, maybe it's when the curve uninverts and turns higher and steepens. Maybe that's the signal. I don't see it just yet. Of course, we've got debt issues, we've got supply issues,
Yeah, we've
deficit
had,
issues. I think $2 trillion worth of extra supply coming
okay.
down the pipe next year. That should push up the long end. Um,
Yeah,
Again, it's all yeah.
because we've retraced all the gains from the Treasury Secretary appointment. This was a gap in TLT on the announcement of Bessemer. Is that his name?
Besant, Scott
Besant.
Besant.
Okay, Scott Besant. This was Scott Besant right here,
Mm-hmm.
and we've retraced all the way back. I'm thinking of trying the long side here maybe next week. So
Again, one to watch though. Again, one of the sort of conundrums, and there's been many curiosities and head scratchers over the last year. Not least the yield curve and the Wall Street powering through to 20,000
yeah,
on the Nasdaq despite higher for longer. Is the move index? I mentioned it earlier. Is the index of Treasury volatility.
I got it.
If the market is thinking debt ceiling and supply and the Fed losing control of the long end and the curve steepening and a bear steepening, etc., if that's the market view, you would expect not only yield to be backing up more strongly, but you would expect implied volatility in the there you go. You'd expect it to be going to the moon.
Yeah, it's
Implied
yeah,
volatility is the lowest since before the Fed started hiking rates in early 2022, nearly 3 years ago. So that I'm not quite sure what that tells us.
yeah.
It's
The
certainly
one of
showing low volatility, but why?
yeah, it's all happening in treasuries because there's confidence in the market and no confidence in treasuries at this point of time. You
No, but
could get
that's showing ultra low or very low volatility, implied
right,
volatility in treasuries.
right,
You would
right.
expect if people fear a complete meltdown of the long end and a bear steepening, and you
It
would
would be up
expect
here.
it would be higher where it was a few months ago.
Okay.
It's
So
come
then,
down sharply. I'm not quite sure of the dynamics of that and why that is, but I would expect that to turn higher again. If,
okay,
as I say, if people fear volatility and a sort of losing control of the long end of the curve, which hasn't happened yet.
all right, Jamie. Thank you so much. We've been doing this for a few years now. I really appreciate you taking time out of your day every quarter to come here
Likewise, I appreciate
and get
I appreciate the invitation.
yeah, and I can throw anything at you, and you have great hands. You catch everything. So really, thank you so much, Jamie. You're appreciated by our community, and look forward to talking to you in the spring when we're in our brave new world.
Thank you very much, Dale. Have a great holiday over the holiday season, and to everyone watching and listening as well. Speak to you in the new year.
All right, same to you, Jamie. Jamie McGeever, everyone, follow him on X at Reuters Jamie. You could go to Reuters and read Jamie's work, and it's never going to be more important than this next year coming up to stay in tune with what's happening with someone who has a macro outlook like Jamie, in my view. So follow him and keep yourself informed through Jamie.
Thank you
That's a
very much,
wrap.
Dale.
All
Kind
right,
words.
buddy.
Thank you.
All right. Hey, Merry Christmas, Jamie. Happy New Year. Look
You
forward
too.
to another year of edifying the community with you.
All the
All
best.
right. All
Take
right,
care.
buddy. All right. Thank you.
Bye-bye.
So that's a wrap, everyone. You can join the team in 12 minutes. See everyone next week. Don't just count your pips, count your blessings, and see you on Monday. Maybe I'll find my phone by then. Thanks, Jamie. You're welcome. People are thanking you. Jamie is great. I concur. Adios, everyone. See you, Jamie.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.